I'm Jill. I'm the venture principal at Capital Factory. I manage our investments in our most recent rolling fund, the Capital Factory Texas Fund, where we're investing exclusively into early stage tech companies in the great state of Texas. For those of you that are not familiar with Capital Factory, we're the center of gravity for entrepreneurs in Texas, and we're also the most active early stage investor in Texas. Today, I am joined by Anthony Pompliano, who is best known as Pomp. He's an American entrepreneur, investor, and host of the Pomp podcast. And he also writes a daily letter that goes by the same name. His interests lie in the intersection of finance, technology, entrepreneurship, and economics, which he tweets extensively about on Twitter. So you can follow along at Anthony Pompliano. Oh, let's see. You can follow him on Twitter at @Pompliano. And most recently, Pomp launched an AngelList rolling fund called Pomp Investments. Anthony, thank you for joining me today.
Absolutely. Thanks so much for having me.
Absolutely. So you have an amazing background and we have limited time. So let's go ahead and jump into it. To kick us off, do you mind sharing a brief background of yourself and your journey to founding Pomp Investments?
Yeah, played football in college at Bucknell University, was in the military for a while, did a deployment overseas to Iraq, came back, built and sold 2 small software companies, ran a number of product and growth teams at Facebook and Snapchat, and then started investing full-time in 2016. I've got a portfolio of about $500 million now across the venture landscape, and recently started my own asset management firm, Pomp Investments. And so we've done everything from some pretty large 8-figure checks on the SPV side to the rolling fund and a couple of other different asset management strategies.
Amazing. And so you've launched several funds in the past, including Full Tilt Capital, which was acquired by Morgan Creek Digital Assets. And your investments focus primarily on cryptocurrency, tokens, and blockchain companies. So for your new rolling fund, Pomp Investments, what is your investment thesis and how does it differ from your other existing funds?
Yeah, so all of the other funds that I had raised, we've deployed all the capital and kind of just managing those and starting to see some of the kind of the profits from those investments come back. The rolling fund is focused on really pre-seed and seed investments. And the idea behind that is you're just betting on the founder, right? Everyone always tries to overthink it. But I found that the best investments I've made have always been just betting on a founder going after a massive market. And so by using the rolling fund structure, I'm able to do that on a pretty consistent basis with a decent sized check. And so far, so good.
Great. And so for Capital Factory, for those of you guys that don't know, our investment thesis is early stage tech companies based exclusively in Texas. And so I'm curious, have you made any investments in Texas in the past, or do you plan to from the new rolling fund?
I've made a number of investments in Texas. One of my best investments ever is Everlywell, based right there in Austin, Texas. And so I fear not investing in Texas at all.
I'm glad to hear it. And as you were saying, you have had a few successful investments in Texas, and the one that you mentioned was Everlywell, which is an at-home diagnostic testing company. The founder and CEO, Julia Cheek, is a good friend of Capital Factory, and she's actually one of the very first people I met when I moved to Austin and was super helpful with helping me diversify my investment pipeline and introducing me to more female founders. But when you invested in the seed round, you invested at a $15 million valuation, and they recently just achieved unicorn status with a valuation of over $1 billion. Obviously, this is a great return for your fund and a big win for Austin. We were really excited when this happened. But what would you say was the impetus to invest in Everlywell, and why did you think they had the ability to win?
Julia, period. Like, that's it. Literally, I think on the phone call or right after the first phone call I did with her, I just said, look, we're in. You tell me what the terms are, all that stuff. It doesn't matter. Like, I just want to bet on this person figuring this out. And she's done a fantastic job. She's built a great team, been able to kind of leverage the capital markets to continue to fund the business. And then she's also been, I think, pretty forward thinking and opportunistic as the market has changed. And so when you take a business through kind of the growth trajectory that they've experienced, you almost end up building multiple companies at different stages. So you kind of build an early stage business, then you build one that's scaling, and now she's got quite a big business that she's managing. And so I think it's pretty impressive what they've done. But I'm just as excited today as I was the first day we invested, and it's because Julia's still running the company, and I think that she's the best person to do that.
She is fantastic. And I think, COVID was also super positive for them. They really, took the first step and were one of the first companies to produce an, at-home COVID test, which is awesome.
Absolutely.
And now,
And I think the other piece too that people don't realize is like when you bet on the founder, you're really saying to them, hey, I trust you to make those types of decisions, right? If you're betting on a specific product or a specific market, you end up being very rigid and kind of loyal to that market or product. When you bet on the founder, you're saying, look, as things come up, basically go, build enterprise value, go make money. And I think that she did a fantastic job of that in the environment where it was mass chaos and uncertainty. She found a way not only to win, but to win in a really big way.
For sure, for sure. And that is one of the few investments that Capital Factory actually missed out on in Texas. So, we're cheering her on from the sidelines now. But I also want to focus on your time in the U.S. Army. At Capital Factory, we're really excited about veteran entrepreneurs and really bullish on these dual-use defense case companies. Actually, funny enough, the floor that I'm sitting on right now is what we call our Center for Defense Innovation, and it's where the Army's located. We have the Army Futures Command here. We also have the Air Force's Innovation Unit, AFWorks. But you served as a sergeant in the U.S. Army from 2006 to 2012, and even did Operation Iraqi Freedom between 2008 and 2009. As a veteran, do you have plans to invest in veteran founders or any defense companies through your new rolling fund?
Yeah, you do your homework. Those are exactly the right dates. Yeah, look, I take a very kind of agnostic approach, right? I don't care in terms of gender, race, location, occupational history, education, wealth status, etc. I'm just looking for people who can win. And I really think of it as early stage venture capital is the ultimate competition. It is kind of meritocracy of ideas and products. And so when you take that approach, what I find is you end up finding some of the best people. And so if you look at kind of the very first fund I ever raised, made 60 investments out of that first fund, 25% of the founders had at least one female on the founding team. There was no mandate to go do that. There was no kind of focus on that. It's just looking for, regardless of location, gender, race, etc., where are the best founders? And so I think that when you look at something like veteran status, it's the exact same thing. What you're looking for is you're looking not only for kind of big markets to go after, but you're looking for founders who can lead a team, who can build a product and ultimately go capture value that they create in that market. And so part of that is finding the founder market fit as well. And so if you're building a defense company, it probably helps if you have some understanding of the defense industry, right? Whether you come from the private sector or from having served in one of the armed services. And so I think that it's all kind of case dependent, right? There's many people who would argue that a veteran who, like myself, when I got out of the military, kind of in my 20s, and really that had been kind of my only job to date, I probably wasn't well suited to go build 90% of companies that were being built at the time, right? I just didn't have the experience. I didn't have the market understanding. But if it was something in the defense sector, I probably would have really understood it well. And so I think you just got to really look for that kind of founder market fit. And then the last thing is ultimately entrepreneurs and founders are problem solvers. That's what their job is, right? Is no matter what the complexity that gets thrown at them or kind of what the problems that they face are, they've got to figure it out. And hopefully they've done a great job of surrounding themselves with a great team, with enough capital to do it, with the right kind of sounding board, either on the advisory or investing side. But ultimately it's on the CEO or the founders to figure that out. And so there's a parallel life for veterans where they've done that, usually with grand degrees of uncertainty and danger, right? And so I always joke that when our founders get in situations that seem really tough and they ask me why I'm not freaking out, I say, because no one's shooting at us. And I say it as a kind of an offhand comment of just like, look, relax. We'll figure it out. But, it could be worse, right? There could be something else that was going wrong. And so I think that veterans in general tend to have, kind of a unique way of looking at the world. They have really, really sharpened their minds through either training or combat. And so I definitely don't run away from investing in veterans. It's just more so I don't necessarily say, hey, I'm going to invest in 10 veterans this year, right? I'm just looking for the best founders. I don't care what your background is or where you come from. I just want the best ones who can go build the right companies.
Absolutely. And speaking of great founders and great investments, what are some of the recent investments you've made from Pomp Investments Rolling Fund that you can speak about publicly?
Yeah, there's a whole bunch of them. I think a couple that make a lot of sense to talk about here. One of them is a company called Stir, STIR. They've essentially figured out that creators are the new small business. And so what they're building is the financial infrastructure for those new small businesses. If you look at kind of the SMB market, it's a massive, massive market. And there's all kinds of different software. You can build everything from tax software all the way on down. And so I think that what these guys have figured out is that the creator economy has some very unique kind of revenue or finance related use cases. And so they've started to build software for that. I've known one of the founders for a while. He previously worked at a company that I had invested in. Very, very impressive guy. And so again, just betting on, hey, this team specifically is going to figure out this problem. And so far, in a very short period of time, they've built a product, they've launched it, they've been able to raise additional capital from a tier 1 venture capital firm at a pretty high markup from the last valuation. And I think that they've got a shot to build kind of one of those generation defining companies in a space that's small today, but eventually will grow to be quite large. Another business that I've invested in is a company that essentially looks at the collectible card market. It's called Star Stock. And what they've done is they basically took a couple of young founders and early employees, and they've teamed them up with the former founder of FanDuel and some of the early employees from FanDuel. And they've created a pretty unique kind of mechanism where rather than have to buy sports cards off of eBay and then have somebody ship it to you, you take the shipping risk, then you take the security risk of it sitting at your house, and then you've got to basically sell it on a platform and then mail it again to somebody else. What you do is everyone just sends their cards into the exchange. The exchange takes care of grading and also the security and custody. And then you're basically trading those cards through a digital interface, and you can basically do it in near real time. So previously it'd be impossible for me to buy a sports card in the first quarter of a game and turn around and sell it in the third quarter of the game. Mm-hmm. But now when it's all held in this kind of a centralized entity, it's much, much easier to do that. And so when you look at something like that, you basically have a super experienced team, also with a lot of market domain knowledge, and they're going after a massive market that obviously is becoming more popular. And so I like our chances in terms of backing teams where they can go and do stuff like that.
Wonderful. Those both sound like exciting companies. I always love to hear about your investments. I know you invest in a lot of really interesting companies across, various industries. But now I want to kind of switch to a little bit more about the actual rolling fund structure and what AngelList has recently created. And so since the inception of venture capital funds in about 1946, give or take a few years, there has been little changes to venture fund structures. And AngelList's creation of the rolling fund is probably one of the most innovative things to happen in the venture capital industry in a really long time. I'm curious, why are you excited about rolling funds, and what do you think this new structure means for the venture capital industry?
Yeah, look, I think that there is a very obvious kind of problem when it comes to venture capital funds. One is GPs will spend 6 to 12 months, they'll go out, they'll raise a fund, they'll close that fund. And then over the next kind of 2 to 3 years, they will make infrequent and unpredictable capital calls. And so if you're an LP in that fund, you don't know when the capital call is coming. You don't know for how much it is. And a good GP might give you a little bit of a heads up, hey, next month we're going to do this. But still, it's pretty short notice. And so that makes it difficult for a lot of LPs, especially individual LPs, to do liquidity cash management. And so with the rolling fund structure, the first thing that I really like about it is that LPs know I'm getting a capital call the first week of every quarter. I know exactly for how much it is. And so I can plan ahead, quarters, if not a year plus in advance. The second thing I like about it is that it's essentially a double opt-in. on a quarter by quarter basis. So as an LP, you're usually held, in my rolling fund, you're held for the first 4 months or the first 4 quarters. You have to invest your committed capital. But after those 4 quarters, you basically can choose on a quarter by quarter basis whether you fund the capital call or not. And so let's say that you funded, through quarter 6, all of a sudden you want to buy a house, and you're going to basically use the money you would have put in the rolling fund to buy the house. You can basically shut off the subscription for that quarter, similar to how you can shut off a Netflix subscription. You can turn it back on for quarter 8. And then all of a sudden you also then hold the GPs accountable. So for somebody like myself, I operate as a solo GP, and LPs really like that because it gives me a lot of flexibility, speed, and a significant kind of branding advantage in the marketplace in terms of winning deals and getting access to deals. But the downside to it is that I'm making decisions on my own. And so I don't have kind of intellectual sparring partners that you would have when you have multiple GPs at a fund. And so one of the checks and balances in a rolling fund is that each additional quarter, the LPs have the choice whether to fund it or not. So if I start to go rogue and make stupid investments, or they don't like the deal flow that I see anymore, or I'm kind of violating the mandate of the fund, at any point, they or I can say, hey, we're not going to do the capital call for the next quarter. And so when you just drastically increase the flexibility for LPs, obviously they're very interested. From a GP perspective, one, you can perpetually fundraise. So literally at any point when I meet somebody, I can say, hey, go ahead and you can commit to the fund either for this quarter or for the following quarter. So there's no kind of quiet periods in that fundraising where I've got to wait until I raise my next fund, a year and a half from now to take more capital. And then the second thing, and probably actually one of the most important things, is that it allows for me to publicly market and talk about the things that I'm doing. And so for somebody like myself who's got a large online audience, what it allows me to do is be more effective for the founders. I can talk about the investment. I can talk about why I did. I can talk about what they need help with, both to LPs in the fund, but also to the public. And so I think that just generally the rolling fund structure is built in a way that benefits from a subscription-like business model in terms of fundraising, and it ends up being a win-win for the GP, the LP, and for the founder. And so when you can kind of align those types of interests, it's obvious to see why there's so much value being created there and so much capital is flowing to that structure.
Mm-hmm. Absolutely. And as you were saying, fund managers are now able to publicly market their rolling funds. And previously, fund managers were not able to do this with the traditional fund structure. We were going in, behind closed doors and chatting with our past LPs and, speaking with our friends looking to raise capital. And so for folks like you and firms like Capital Factory that have a large public following, this allows us to easily share these investment opportunities now with any accredited investor. And so with the rules now being changed, how do you think this impacts an entire new class of investors like those that are listening in today?
Yeah, look, I've said for a long time that the accreditation laws in the United States are a violation of the American dream. The American dream basically states that you can come from anywhere in the world, regardless of the language you speak, the place you were born, your wealth status, your education status. When you come to the United States, you can build a more prosperous life for yourself. You got to do the work, but if you do the work, that's the opportunity that you're presented through that American dream. And so what we find is actually that's not true when it comes to investing. We've literally written into the law that you have to be rich in order to make yourself wealthier in the private market investing environment. And so when you go and you look at returns, there are a lot of kind of value and wealth that is created in the private market. And so we essentially are telling people who are not wealthy, you cannot participate in this wealth creation. And I just think that's wrong. And so what I think is going to happen over time is we're going to move to an education-based model rather than a wealth-based model, but we're not there yet. What the rolling fund structure does through some of the new regulations is essentially allow us to get closer to where we should be. So it doesn't fully solve the problem, but at least we now go from, hey, you have to be, very, very wealthy. You have to be an institution in order to participate in this. And we kind of open it up and say, look, if you're an accredited investor or qualified purchaser and you have no connections, right? So you can literally just be on the internet now and you can participate in these various opportunities. You don't have to be somebody who went to Harvard or Yale or Stanford. You don't have to have that rich uncle or a friend. And so I think that just naturally what we're doing is we're democratizing access. And I think that that's a trend that's only going to accelerate over time. But the rolling fund is kind of another step forward in this entire movement to make sure that anyone in the world can participate in the wealth creation opportunities that exist at the earliest stages of the formation of a business.
Mhm. Yeah, and the SEC recently did change a few of the rules around accredited investors, but it's getting better, but still, not completely democratized for sure. But now that all accredited investors have a seamless path to becoming limited partners in these funds, as you said, they don't have to have that rich uncle or have a connection in order to invest in, for example, a firm like Pomp Investments. And previously, obviously, this asset class has been primarily for wealthy individuals or pension funds or large institutions. But now we're seeing more underrepresented investors entering the venture capital landscape, folks that might not have as many connections as someone like you or I. So with more underrepresented investors entering this asset class, what positive industry changes do you expect to see in the coming years?
Yeah, look, I think that just naturally, the more people you can get involved on both sides of the marketplace, the better, right? So when you look at from a founder and kind of entrepreneurship standpoint, we need to encourage innovation, we need to encourage experimentation, we need to encourage entrepreneurship and capitalism, right? Regardless of what people think, socialism is not cool. Kind of manipulated markets are not cool. We need to have a democratic capitalistic society that is driven by entrepreneurs, inventors, and innovators. And so I think that by encouraging that, we can continue to push the progress of our country forward, and also in the business and capital markets as well. On the other side of the marketplace is you need to have successful people or people with capital to fund those ideas. And so when you look at that, it is a marketplace. There is supply and demand, and the supply of capital is important to keep up with the demand of entrepreneurship, right? With COVID happening, we've seen an explosion of new business applications. And not every one of those businesses is going to be something that is venture backable or kind of early stage technology related, but a lot of them are. And so I think that we've got to continue to build up the supply of capital in that marketplace. And the way that you do that is you continue to open up access to more and more people. And eventually you make it so that anyone can participate. But I think that's really kind of what we're watching happen. And as you build more liquidity in that marketplace between supply and demand, what you're going to get is you're going to continue to drive bigger and bigger returns, right? The more experimentation, the more innovation that we can push, the further that we are going to progress across the technology landscape. And so I think it's just a net positive. There's a lot of people out there who are kind of arguing, frankly, all kinds of radical and idiotic things against this, but I think they'll be on the wrong side of history. And so the nice thing is that even if those people continue to kind of argue, pretty idiotic stuff, it's not going to matter. Like the progress and the momentum that is already happening with things like the rolling fund or other products that are in the marketplace end up winning. And so, we'll kind of see where we go and how long it takes. But I think it's a foregone conclusion at this point that capital markets, especially the private market, will be more democratized and we'll be able to fund more and more companies, which ultimately lead to more progress.
Mhm. Yeah, and I'm personally excited about, all these new diversified investment opportunities for accredited investors. As you said, I think there's only positive things that can come out of it. But for those listening today that may have never invested in venture capital, what advice would you give them about investing in rolling funds? What should they expect?
Start small and be ready to lose it all. That's what I tell all of our investors.
You
Well,
heard
look,
it.
I think that it's just like anything, right? Don't invest in things you don't understand. Make sure that you really, really take the time to understand the strategy, to understand who the general partner, the person who's making the investment decisions, who they are, what they stand for, what they're excited about, what is their thesis, what is the process that they use, all that stuff. Start small, especially with a rolling fund. You can literally go in and just meet the minimum on the rolling fund. So let's say a general partner is set it at $10,000 a quarter. Okay, just commit to the 10,000. And then as you kind of learn how the process works in quarters, 2, 3, 4, whatever, you can always upsize it. You can go from 10, 15 to 20 to 25, whatever you want to do there. But I think that really just kind of starting small and understanding what the opportunity is and getting a crash course in it is important. And then two, I say, be ready to lose it all, because venture capital, it's this weird thing, right? Frankly, I think it's like 60% of all venture capital funds don't return the capital back to investors, right? So you actually lose money. Well, that's not very good. So you want to make sure that not are you just, hey, I have venture capital in my portfolio. You want to make sure that you're with somebody who has a track record, somebody who's shown to be able to do this and do it at a high level, and not just have, hey, I have one investment that went well. I've done many, many investments that have done well. And so what you're looking for is kind of a good manager with a repeatable process who's got a higher probability of being successful. And I think that when you have a platform like AngelList that has so many different rolling funds, you've got the ability to kind of evaluate them alongside each other. And the best people will accumulate the most capital. And if they end up, not doing well or not performing, that capital will find home somewhere else. And so, it's a market dynamic that I think is important. But if you're an investor doing this for the first time, just start small, really pay attention to it. And then just understand kind of that this is an asymmetric asset class that is very different than, let's say, the stock market. But that's also where the opportunity lies. And so just understand what you're getting yourself into.
Mm-hmm. I like that quote, start small, be ready to lose it all. I'll be using that in the future. And as we were saying, the rolling fund is essentially an investment subscription model. So for example, in the case of Capital Factory, our investors must commit a minimum of $25,000 a quarter for 4 quarters. So a total of a $100,000 investment for the first year. And so that means that instead of investors having to provide $100,000 up front, they can now allocate it over 4 quarters. So this is a huge advantage for potential limited partners. They can have more cash on hand for themselves. But in your opinion, what else makes the rolling fund more advantageous for interested limited partners?
Yeah, LPs have to understand that ultimately you're not the customer, right? And this is a conversation I have with every LP, and the smart ones understand this. The ones who end up not spending too much time being LPs, they end up not liking this answer. But as an investor, my job is to service the founder, and the founder is the customer. And what ends up happening with a rolling fund is that an LP is participating in a structure that provides more flexibility for them. In some cases, it provides better fee structure for them. But ultimately what it does is it provides me as the GP the tool set I need to better serve the founder. So I have literally on multiple occasions met with a founder and immediately turned around and committed to investing either in the same meeting or shortly thereafter. And the rolling fund is something that can help me quickly not only make those decisions, but also then execute the investments as well. So I think that that's the type of stuff where if you're an LP, what you want to basically do is find something where your interests are aligned with the GP and with the founder. And so rolling funds, I think, do that really well. But ultimately, that to me is the biggest thing, is it just provides a better tool set for the GP to service the customer who's the founder. And if you continue to service the founder, you'll find that not only can you make quite a bit of money from a return perspective in the investments you're making today, but it also helps to build a brand and to kind of build sustainability to the process. And so you'll be able to do this for years and years to come as well.
Mm-hmm. For sure, for sure. We've really liked working with the AngelList platform, and it's it's great because it gives us the ability to easily make investment decisions, and not have to call up our lawyers and work with them, or with our fund managers. And so we've really enjoyed working with them as well. And one thing that I've noticed when raising for our Texas fund is something that's, I suppose, been surprising to me is some limited partners are hesitant about this new structure. It's confusing for them; they don't understand it. But there's, clear benefits and advantages for limited partners when it comes to the rolling fund. So for example, like we said before, limited partners can now invest on a subscription basis, which allows them flexibility, obviously, when it comes to investing. When you've been meeting with LPs, what are some common questions or maybe even hesitations that they've posed to you about rolling funds? And what kind of response do you have for them when overcoming those questions or hesitations?
The number one question I get is, Pomp, why are you doing this?
You're already doing so much.
I think it's, look, I've had quite a bit of success with the traditional structures. And so their question is, I think some people look at the rolling funds like, oh, those are for fund managers who can't raise dedicated funds. Those are for fund managers who are just starting out. Those are for fund managers that, are only going to manage $1 million or $2 million. And they look at somebody like me who, I've invested in over 100 companies. I've literally built a 9-figure portfolio in some of the biggest names across the kind of venture ecosystem, can get access to quite a bit of deal flow, and then get into the deals that I want to get into. And so they say, you basically violate every single thing that we would think about a GP who would use this structure. Like, why are you doing it? What I continue to tell them is, part of investing in innovation is constantly thinking about how to improve or kind of skate to where the puck is going. And so doing that as a GP is just as important as finding other people who are doing it. And I truly believe that this type of structure can have a significant advantage as we kind of move forward in the world. And so to me, it's just a natural evolution. But that's probably the number one question I get. It's just like, why are you doing this? And when I sit down and explain the advantages, I explain kind of the interest alignment between the three parties in the transaction, I think they ultimately get it. But we just need more folks like myself, right? So we've got people like, Capital Factory, like Sahil from Gumroad, and a couple of other folks who have really started to kind of raise these funds. I think people are starting to realize, like, wait a second, this isn't just for the $1 million, fund manager or for somebody who's just starting out. This is a superior structure. And as we can convince more and more people to do that, I think we'll be in pretty good shape.
I agree. For us, this was our 7th fund, and all of our past funds were obviously a traditional fund structure. And for us, we just felt like this was a really natural fit for us and allowed us to, not have to miss out on investment opportunities just because we're in the fundraising process. And for us, we're, the way Capital Factory works is we do have what we call an advisory program where we reserve investment rights in those companies. And every week we have between, 10 to 20 of our investment rights being triggered. And so every week we're looking, at 10 to 20 deals and needing to make very quick decisions. And so for us, the rolling fund structure is just a really natural fit for the way that we invest. And we've spoken a lot about the benefits of the rolling fund for fund managers and also limited partners. And those are really clear. But in your opinion, what are the benefits of a rolling fund structure for founders?
Yeah, I think that the key thing for the founder is founders want to have the least friction, kind of least complex fundraising process possible. And so when a GP can say, listen, I can execute this investment in under 72 hours if needed, that's really, really attractive to a founder. And then on top of that, when you have a solo GP like myself, I think Capital Factory has a little bit of a different structure. But when you can kind of make quick decisions as well, right? And I think that you guys have done a great job of kind of building an investment process that allows you to make quick decisions, even though there's multiple people involved in the process. But I think that that's really it. Like, make a quick decision and be able to execute quickly if necessary. And then founders know, hey, well, when I meet these folks, either it's going to be a yes or a no, and I'm going to know pretty quickly, and I'm not going to have it dragged out for 4 weeks. Like, that's what founders want. And so the rolling fund structure provides that. And then on top of that, there's all kinds of things in terms of reporting and kind of the management and the valuation marks, et cetera, within the AngelList software platform. But for founders, they don't see a lot of that. It's literally just, can you make a quick decision? Can you execute quickly? AngelList provides that, and I think that they really enjoy it.
Mm-hmm. Very good. Well, that is all the questions I have about the rolling fund, and we're going to end with doing a few quick rapid fire questions. And these have all been crowdsourced from, Twitter, LinkedIn, and questions that folks have wanted me to ask you. So the first question is all about the new startup cities. So you've been living in New York City for over 5 years now. And with COVID-19, we've seen founders and investors and corporations flock out of the big cities like New York, San Francisco, and Boston. And, they're ending up in places like Denver, Austin, or Miami, which you're in right now. What city or cities are you bullish on becoming one of the next large tech hubs?
The digital city, the internet. The geography doesn't matter anymore. Who cares? I think that when you think of economies, everyone just immediately goes to the mental framework of the physical world. But we all live in a digital economy, live on the internet. That internet, drives a lot of kind of the investing frameworks that I have. We're going to have a native digital currency to that digital economy. We're going to have native digital organizations to that economy. And so I think that You and I right now, we're actually hanging out in the kind of digital economy, right? We're literally doing this through computer screens. And so I think that everyone is so focused on looking external to kind of the digital economy. They're trying to figure out the physical geography. But what ultimately we figured out with COVID-19 is the physical world doesn't matter. You can live anywhere in the world and you can participate in this digital economy. And over time, that's just going to become more pervasive, which I think is a good thing. And so that's the one I'm most excited about.
I love it. And our listeners would kill me if I didn't ask you a crypto-focused question. So you're best known for being a Bitcoin bull and are often featured as an expert on different news channels speaking to the crypto markets. Why are you bullish on Bitcoin, and what do you predict will happen with the token this year?
I thought we were going to get through the whole thing with no Bitcoin.
We have to have one or two in there.
No, look, Bitcoin is the greatest store of value asset that the world's ever seen, point blank period. It is a savings technology that protects your purchasing power while the US dollar completely destroys it. And I think what we're watching right now is there is slowly but surely individuals, financial institutions, and corporations are realizing how good of a store of value this asset is. And so in the last 12 years, you've seen it go from creation to $1 trillion market cap asset. That will continue, I think, for many years to come. And so ultimately what you have is kind of value being secured by the strongest computing network in the world. It's a fully decentralized open protocol, meaning that anyone in the world with an internet connection can access it and leverage its capabilities. And no one can control it. No one can create more of the asset. And I think that those are all really, really important things in today's world, which is filled with kind of top-down economic and monetary policy. There's kind of a default quantitative easing and inflationary environment. And then a world where we're seeing censored or centralized entities engage in everything from kind of abusive behavior to censorship to just bad decision making. And so I think that Bitcoin is kind of the perfect asset for the future world that we're moving towards and was frankly ahead of its time. And so today at $1 trillion market cap, I think that we'll see it surpass gold's market cap of 10, 11 trillion in the next couple of years. And then by the end of the 2020s, I think that we'll see $1 million Bitcoin price, which would be about $20 trillion. So kind of a 20x from where we are today, which sounds insane, but I've said plenty of things in the past that sounded insane and ended up being conservative. And I think that if anything, I'm probably underestimating what we're witnessing happen right now.
Very good, very good. And recently, Tesla announced in an SEC filing that they bought $1.5 billion worth of Bitcoin. And the company also said they start accepting Bitcoin as a form of payment for the products. How did Tesla's investment impact the price of Bitcoin? And should we expect to see more corporations following suit?
Yeah, there's a lot of people who are going to debate like what was the price impact. I probably don't have as much of an opinion on that. I think it more so than anything is it really was kind of a de-risking from a career standpoint for CEOs and CFOs of publicly traded businesses. If the world's richest man, Elon Musk, and one of the most valuable companies in the world, in Tesla, can do it, why can't we? Right. And I think that's ultimately the biggest inflection point from that decision. And so, it's a foregone conclusion. Apple, Amazon, Google, Facebook, all the way on down the line, they're all going to do it. Whether they do it in the next 6 months or in the next 60 years, it's going to happen. And I think that now that you've got a Fortune 500 company that's done it, each incremental one that does it is less and less important in terms of we become kind of desensitized to it. And it moves from a contrarian idea to a consensus idea. And so I think that it's all kind of lining up and playing out how Bitcoiners have talked about for years. And so I think there's a lot of people sitting on the sidelines right now quietly, and they're kind of cautiously optimistic. But at some point, they're going to come out of the woodwork and they're going to say Bitcoiners are right. And, we'll see when that is. But so far, so good.
Great. And to round off our chat, I will move back to the VC industry so you don't have to talk anymore about crypto. But the rolling fund is one of the most recent innovations for the venture capital industry. I'm curious, what industry changes or innovations do you hope to see next?
Yeah, look, I think that it's kind of three main frameworks that I really use, right? Every stock, bond, currency, and commodity is going to get digitized. And so you have digital stocks, digital bonds, digital currencies, digital commodities. Those digital assets are far superior to electronic CUSIP assets that the world operates on today. And so understanding the superiority of the digital asset over the electronic asset is important. Two is decentralized products will be larger than centralized products. So whether you're talking about an asset exchange, or if you are talking about any sort of social media platform, et cetera, the decentralized version will ultimately be bigger than the centralized version. So there's going to be quite a bit of disruption, innovation, value creation, and capture that happens with these decentralized products. And then the last thing, and kind of meshes those two things together, is that the world's going to run on open decentralized protocols. The days of kind of the good old boy network, or kind of the elites having control, power, and influence are over. And now what's happening is if you take kind of the finance industry as one example, literally technologists are conducting a full-on assault of Wall Street, and the technologists are winning. And they're winning in a major way. They've already literally created more sound money than the dollar. They've created a better store of value. They've recreated all of the financial services on Wall Street in a decentralized manner. And there's billions and billions of dollars that are now flowing through these products. And so I think you can take that framework of kind of digital assets over electronic CUSIP assets. You can take the world of decentralized products over centralized products. And then you put both of those onto these open decentralized protocols. And what you're going to watch is you're going to get a complete rebuilding of every system using those three kind of building blocks. And I think that the world is going to be much better, much more efficient, much more resilient, and much more digital in the future. But when those things come together, again, I think we're just drastically underestimating how disruptive and how valuable it all will be when it's said and done.
Very good. Well, Anthony, thank you so much